Hi, my name's V, and I'm the founder of Connect to Accountants, the place where people come to learn financy stuff in an easy to understand way. So what's accounts receivable? What does it mean? And what is its definition? Well, we'll go through this in this video. The best way to show you is through example. So say you go out and buy yourself a coffee that you can't pay. So the person who owns the shop, so the shopkeeper says, hey, that's okay, mate. I'll just put it on your account and then you can pay me later. So you get your coffee and the coffee shop owner gets an invisible IOU from you, the customer. So this shopkeeper then records this IOU in two places. Okay, remember, one on the left side and one on the right side. On the right side, he puts it under sales because he's made a sale of coffee to you and you've taken your coffee away and drank it. On the other side, he'll put it under accounts receivable. That means this is money that hasn't yet been paid to him, but he's held it into account to remind himself that you owe him this money. Okay, so he's set to receive this money. It's a receivable and it's in an account, so accounts receivable. In the accounting world, we need to be able to record this IOU from customers because in business, you don't get just one IOU. Usually, businesses, especially large businesses, get heaps of IOUs that they need to keep track of it to see who owes the money and then who has actually paid, when they started to owe the money and how long it's taken to actually pay them. So let's say this person, you, comes back after a week and you give the shop owner $4 to pay for your coffee that you took last week. So the shopkeeper will record this receipt of money by using two entries again. Remember, the left side and the right side. So he puts the $4 in the cash account because you've paid him cash. So he's received this cash. So cash will go up. But he'll also reduce the accounts receivable of $4 because he's already received it. So receivable is now zero because you've already received the $4. So when you calculate accounts receivable, what you have is $4 going in, that's when it was to be received, and then $4 going down. That means it's been received already. So accounts receivable is just a place to hold all the IOUs in your business so you can better manage them. Just think of it as two compartments where you put your IOUs in one section and then on the other side, as you get paid your IOUs, they reduce and then hopefully turn into cash. So that's it. I hope you enjoyed this video about accounts receivable. I'd love to hear your stories about accounts receivable. Just leave a comment now.